Welcome to the Legacy Leaders Podcast. Are you doing the best for your client to help them create their legacy? Are you creating a plan that goes far beyond finances to help people ensure that it becomes the driving force behind all decisions? On this podcast, hosts Katie Beth Hand and Stan Miller will help you with growing your practice and your clients' peace of mind. Together, they bring the best and brightest minds to share with you how to help your clients develop their best legacy. And now, here are your hosts, Katie Beth and Stan.
Welcome to the Legacy Leaders Podcast. I'm Rod Hatley of Hatley Law Group here in San Diego, California. And sitting in with me today is a longtime colleague and friend, Carolyn Konecki, who is a private client account executive with Cavignac Associates, a very well-regarded insurance firm here in San Diego. So Carolyn, welcome to the program.
Thank you.
I think you have one other title that I don't want to mess up. So can you share that with us for our listeners?
I'm also the personal lines manager, so I run the entire personal lines practice here at Cavignac.
Okay, very good. Let's see. I guess the question now, you deal with insurance. Kind of describe very briefly, if you will, the kinds of insurance that your company handles and what you specifically are focused on when you deal with clients.
Right. Our company is an independent brokerage. We handle many lines of insurance, business insurance, and things of that nature. The area of my practice is exclusively in the personal line side. So insurance that individuals would buy to protect their homes, their cars, their collections, art, jewelry, wine, boats, planes, and then of course, we have flood, earthquake, rental properties, and all that. But it's things that individuals would have, not a business.
Okay. And are you focused primarily here in San Diego, or are you national in scope or regional? I'm not sure that I fully understand.
Yes, that's a good question. Thankfully, we're not just in California because the market's so challenging here right now. But we are domiciled in California, but I am licensed in all 50 states.
Oh, wow. Okay. All right. So anybody listening to the podcast, if they had a need for your services, they could certainly reach out to you through the contact information that'll be provided with this podcast. Okay. How did you get into insurance? I mean, what led you into this area, if I can ask?
Yes. So it's definitely not you go to college and go, I dream of being an insurance agent.
Right.
My husband actually got into the business back in 1991, and he was a captive agent initially. He went independent in 2003, and then asked me to join him in 2004 to handle the marketing and the administration of his agency. That really wasn't enough, meat on the bone for me. So I started to sell in 2006. We marketed to both businesses and individuals back then, and we did both what we call Main Street insurance as well as high value home or high net worth insurance. Sure. And I just found that I gravitated, to the more complex situations. I found that these policies could be customized.
Really?
And I just found that to be a better solution for my successful clients.
Okay. So for our listeners, can you define successful clients in terms of, what's a great fit for what you do?
Definitely.
It may not necessarily be applicable to, Cavignac generally, but for the kind of focus that you have, can you share with us can you define what a successful client, who that person is?
Yes. So my ideal client, their house has a replacement cost of $1 million or more. That's not the market value, right? It could be right on the ocean and worth 15 million, but it might to sell it. But it needs to be the replacement cost. And this is in California and most other states like Texas and Massachusetts, New York, things like that. Some other, smaller states, that minimum will drop. There are not, some states don't have a bunch of $1 million homes, but California certainly does. And so the house has to have a replacement cost of $1 million, and ideally not located in a brushy area. So we're not looking for mountaintop properties. Coastal is best in this particular market. My ideal client will typically own several cars. Some of them may be collector cars. We insure a $3.6 million Ferrari.
Wow.
clients who have 20, 30 collector cars. It's a fun hobby.
Sure.
They will typically have jewelry, art, wine, or other types of collections. Everything from campaign buttons to baseball cards to Santa Clauses. We've kind of done it all.
Sure.
And they usually also have a need for a high limit excess liability policy, which is also known as an umbrella policy.
Sure.
And some of the regular carriers maybe can only go to 2 million or 5 million. We can go up to 50 million. And so it just, again, it helps our clients protect their wealth. And then they may have rental properties, watercraft, homes in other states.
Right.
My best clients own a lot of stuff.
Okay. So I would ask you to, if you can think back, because it's always helpful, I think, for folks to know, success stories, but also like missed opportunities.
Yeah.
Can you can you share with us maybe one really great success story that sticks out in your mind where you were able to really deliver for a client? And then one where maybe it just didn't work out as well as you might have liked or as you had hoped that it would. Can you share those with us?
Sure. So, my best success stories are, and they all kind of have the same thing. It's someone who comes to me and their insurance is a mess, right?
Oh.
They have multiple policies with multiple carriers, sometimes with multiple agents.
Wow.
No one's talking to anybody else. And so it's like, okay. And this is my favorite thing, is the analysis part. So I'll take what they have. We do a very extensive review process, very different than most insurance agents.
Sure.
We ask a lot of questions. We really get to know our clients. And I'm also at a point in my career, I'm very selective about the clients we bring aboard. They have to be a good fit for us.
Of course.
We need to be a good fit for them, that type of thing. So it's not just, oh, can I get a quote for my home insurance? That's really not who we are. So I'll take all this information, figure out who they are, what's important to them. Some people are much more risk averse than others. And so we'll just go through the whole process. And then I actually am one of those weird people who reads the policies because they're contracts.
Sure.
And, so a lot of times we will unearth that there's gaps in coverage. Maybe the limits are not adequate to protect their wealth. There's not coverage for some of the special things. A lot of our clients do have domestic employees. They'll have nannies for their children, or they'll have housekeepers, private chefs, cooks, tutors, chauffeurs, groundspeople, and they may not be properly covering those people in that exposure. So we've got workers' compensation coverage for their domestic employees to deal with. We have employer practice liability insurance. And so I take all of that, I organize the chaos, I analyze it, we add coverages they need. And because these policies are customizable, we'll discard coverages they don't need. Really,
Wow.
Why pay for something that you're not going to use, And then, I think my favorite part is to educate them regarding the coverages they have. This, this is why you need cyber coverage. This is why you need, employer practice, or we have equipment breakdown coverage. So there's lots of bells and whistles that come with these types of policies that are, made to fit the particular client. So we have what they need.
Fabulous. Okay. Is there a situation like maybe somebody you had really tried to help, but you just couldn't, and then it didn't work out for them ultimately? Because I think that, the wins as well as the losses are important to kind of help people understand, it's important to get this done.
Right. Well, I can tell you this, a situation we had early in my career. I was referred somebody, I wasn't their agent at the time, but they were carrying like average medium limits on their auto insurance policy, which was $50,000. California is a split limit state typically. So they had $50,000 per person, a bodily injury, and $100,000 per occurrence. Okay. And his wife was at fault in a car accident where there was a $90,000 shortfall. Oh. Okay, so it was $140,000 of injuries to the other party. She only had $50,000 of coverage, so there was a $90,000 gap. So because of that, she now had to go back to work. She was a stay-at-home mom and find a job. And they calculated that she was going to have to work for 13 years to pay off that $90,000.
My goodness.
The sad thing is, it would have cost them at that time $40.
Oh my goodness.
$40 to increase their coverage. So a lot of times it's explaining, why you need the coverage you need, because of this. And this was not a horrific car accident. This
Sure.
was just, happened to be that the person broke their ankle, and, doesn't take much to rack up $100,000 of medical bills.
Not at all. So, okay.
Mhm.
Thank you for sharing that. This is called the Legacy Leaders podcast. So obviously, what you do is so vitally important to help preserve a legacy that otherwise, if there was, as you just shared with us, a shortfall, it could really be, disastrous for a client or families
Absolutely.
or what have you. If I could put you on the spot, what does legacy mean to you? And I wonder if you possibly given thought to that
Ooh.
in your career as an insurance professional.
To me, yeah, you're kind of getting me this one, Rod. I think a legacy is the essence of who you are that you leave behind.
Right.
And it's everything. Yes, of course, there's the monetary aspect.
Sure.
But it's, who were you as a person? How did you donate your time, treasure, and talent? What charities were you involved with? What impact did you have on your family and friends? So to me, a legacy is very encompassing. It's not just, how much money did you die with?
Right.
Yeah,
and I feel the same way. It's more than just the material wealth, which is, if you're able to leave your family something like that, that's really terrific. But, I think it's also, as you say, it's more all encompassing. It's the stories, the lessons, the values, all of those things that are really, and I would give anything I never knew my mother. My parents divorced when I was very young.
Mhm.
I never knew my mother, never knew that side of the family. The only I did know my father's mother, my paternal grandmother, had shared with me the stories about his family, and they'd come from, their circumstances, etc. And I wish more than anything that I had either had the presence of mind to jot it down with a notebook and a pen, or maybe I'd put a tape recorder in front of her and asked her to, would you go over that story again?
Yes.
I have these fragments in my memory, but I don't have the full story. And so I think those stories are really helpful to tie you to the past, and then of course the lessons learned from, a life well lived, and, the values of hard work and thrift and giving back to the community and stuff like that, I think are really key. Let's talk for a minute about, I think all of us aspire to be the quote unquote trusted advisor to our clients. And I suspect that you probably aspire to that too. What does being a trusted advisor mean to you in terms of what you do as an insurance professional?
And I think that is just really a key question, because most people don't view their insurance agent as an advisor. It's more of a transactional relationship. But
Right.
for me, being trusted means that clients know that I have the knowledge and the experience to provide sound advice. Again, I actually read the policies, which are contracts. I understand the language of what is covered and what is not, so I can advise my clients on ways that they can manage their risk, and rather than just selling insurance. Like some of the things that we do is we consult on things that clients can do to protect their homes, say from a wildfire or water damage from a
Right.
burst pipe. Because even with great insurance, nobody wants to go through that kind of a claim.
Of course. Yeah.
It's horrific. And so it's advising on all different levels, preventing, but then if something happens, having the insurance to make sure that they have transferred that risk to the insurance company and they're not absorbing any more than they can afford to absorb or want to absorb.
Okay, thanks. Let's see. Another question. Who are the best referral sources for you and the clients that you serve? And just
All
for my curiosity, and for those who are listening.
I would say it falls into three different categories for me. They're all referrals. I mean, my entire business is referral based, and it's
Right.
relationships and word of mouth people,
Sure.
passing on my name. But my best business comes from financial professionals such as wealth advisors,
Right.
real estate agents, because people who are moving here typically need to obtain a property policy, and it starts with that. And then property policies are non-transferable. And then we get a lot of business from the commercial agents here in the office, business owners who are looking to have us, handle their personal insurance as well. So it's all in one place.
Very good. Okay, thank you.
Mhm.
Let me see. And with your years of experience in the industry,
Mhm.
what does it mean to be an insurance professional? I mean, I think you sort of, touched on it here, but
Mhm.
could you do maybe a little bit deeper dive on that?
Sure. So there's a couple of different types of agents. There's captive agents who only represent, one particular carrier like State Farm or Farmers. We're
Right.
independent, so we represent a bunch of different companies. To me, that's very advantageous for my clients because we can shop the market and find the right policy for our clients.
Right.
In California right now, it's very difficult to obtain property policy from the admitted market. A lot of carriers have stopped doing business in California
Really?
right now.
Is that
Yes,
because of the wildfires?
as a result of the wildfires. They also, we have a very antiquated system for rate increases. It's based on a law that was passed in 1988 called Prop 103. And they're not allowed to consider cost of reinsurance as part of their rating factors. And then the Department of Insurance is also not allowed to use any kind of wildfire modeling or computer forecasting. So you can't do anything predictive to set rate. Yeah. So the insurance companies, of course, use all this technology to determine what risks they want to write or not, but they're not able to use any kind of they can't use this in setting rates. So they have to go before the department and say, hello, we'd like, a certain amount of rate. We can't show you half of what our costs are to justify the rate.
Yeah.
And then the process involves several months, if not years, of getting rate. So right now, most insurers are not getting enough rate. It's not worth it to them to sell a new policy because they're going to lose money right out of the gate. So they've all kind of paused. State Farm recently paused. They're the largest insurer in California, and they stopped writing all new property business about 3 weeks ago. Yeah.
Wow, that's alarming. Wow, I did not know that.
It's terrifying. Yeah. So we're really encouraging people to contact the Department of Insurance, copy the governor, make your voice known. There is a solution to this. It's very easy for them. They just need to approve rates in a timely manner because insurance companies are not charities. They are businesses.
Sure.
And if they can make money, they'll open back up. We'll have more capacity. We'll have a competitive situation. We have a supply and demand, and things will level out. Right now, it's horrific. I have a client who's paying $135,000 for 1 year property insurance. Yeah.
I'm flabbergasted. I don't know what to say about that, other than I think you make the point very well. California, and what I thought California used to lead the nation in a lot of things. Apparently not in this regard, and that's just tragic.
No, we're
So
not.
they're basically dealing with the 35. They're dealing with a 35-year-old law that doesn't allow them to set the rates anymore. And so, as you say, because they're a business, not a charity, and they have to be responsible to their shareholders. If they're not able to turn a profit, they're not going to underwrite the business because they lose money immediately
from the get-go.
Okay, well, thank you for sharing that. And I think for the listeners who are in California, a word to the wise, make sure that you reach out to the California Department of Insurance and the governor and let them know, this is something that's really important because, and who's got the money unless they're, you're a very well-heeled client, to pay that kind of cash to get an insurance policy. That's just.
And it's also creating a skewed market because if I have clients that live on the same street, basically nice tract houses, but tract houses. And, one person who's been in there for a while has a policy, he might be paying, $2 $2,000 to $4,000 a year. The guy that moved in a few years ago, he came in at a higher rate. He's paying $8,000. The new guy moves in, he can't get any insurance, so he has to go to the secondary market, and he's paying $12,000 to $15,000. These are all the same house with essentially the same cost to rebuild, and so that's just not fair.
No, and it's just insane. So, yeah, and this is, I didn't even realize this was an issue out there, but I've heard that things had gotten challenging, but I didn't realize they were that challenging. Let's see. What do you like best about what you do?
I like helping people. I like that, when we used to have choices, I would come in, organize everything. I felt like a superhero with my cape on. I'd fly in and I'd say, let me help you out, and I would do my little analysis. I would, go out and get competitive quotes. I would show them, we have these 6 different policies to choose from. Here's the one I recommend. Here's the coverage, and I'm giving you more coverage and I'm saving you money, and it's great. Yeah. Those days are gone. We don't have as many choices, but essentially it's the same thing. I like to go in and sort out the situation for my client and consult with them and advise them on what is going to be the best solution for them. Right now, it may be an expensive solution. And a lot of times my advice is, hey, stay put where you are. You're not going to find anything better. It's like musical chairs right now. Don't get up. You won't find a chair to sit down in. And so it's giving that advice that if my true north has always been what is best for the client, even if that's not me. Fabulous. No, I think that's terrific. I was going to ask what you like least, but I think you've kind of already alluded to it. Things are just so challenging right now that people can't even get insurance unless they're willing to pay through the nose. And that's just and sometimes you can't even get that. And there is the California Fair Plan, but there's a limitation. Talk very briefly about that, if you would, please. Sure. So the California Fair Plan is a program that was set up. It's funded by the voluntary insurance market. So all the companies that do business in California, State Farm, Travelers, Safeco, everybody pays to, and kind of like an assigned risk program. And so the California Fair Plan is a fire only policy. So it only covers your house against the peril of fire, smoke, and explosion. But that's it. It's only the one. It has a maximum of $3 million of total coverage. So that's for the house, all the other structures, all the stuff in your house, your contents, and your loss of use. And so for people so it's really ideally designed for a house that would be replacement cost of $1.5 million. Right. But so what we're doing now is, and it's also, by the way, it's a market of last resort. You are only allowed to sell a fair plan policy if no other market, even one that's a lot more money, will write it. So if I have a fair plan policy at $8,000 and I've got someone sitting over here at $15,000, I have to sell the $15,000 policy. Have to. Okay. So then the person who buys a fair plan policy has to then go out and get a secondary policy called a difference in conditions policy. This will add coverage for water, theft, liability, all of the other coverage. So you end up with these two. It is not a great policy. The other thing, it's not tested, right? It's designed to just pick up, back in the day, people who lived in the mountains or, someplace that they couldn't get insurance from the regular market. And it's not designed for larger, more expensive homes. Mm-hmm. If we have a situation in California where you have a very large wildfire, there's no reserves. So what's going to happen is if there's a shortfall between the premium that the fair plan has collected and what's out there, all of the companies that are still doing business in California have to participate in providing money to pay these claims. So right now, State Farm currently has 21% of the market share in California. If there's a $10 billion shortfall because we have a big wildfire and all these fair plan policies, have to start paying out, State Farm's going to have to pony up $2.1 billion. Yeah. And there's no way for them to recover. So if the fire was caused by a utility company, which we've seen, they lose out. So it's very expensive for these companies to do business in California, and driving business to the FAIR plan is not a solution. The other thing is the FAIR plan is not an insurance company. It has no surplus. It has no underwriters. It has no claims adjusters.
Right.
So you get a fire where 3,000, 4,000 homes burned down, they're going to be hiring independent adjusters. It's going to be a mess.
Yeah.
So,
okay.
We need insurance companies.
Well, on that cheery note, let's see. How can people get in touch with you? If any of our listeners, have, like what they've heard and they would like to have a conversation with you, how do they reach out to you, and how do you work?
So in terms of how am I compensated?
Well, let's see. I assume you consult with folks to help them understand
yes,
what they can
and
do.
there's no cost for that. We're paid by the carriers once we place coverage.
Very good.
If we're able to place coverage.
Sure.
So my direct phone number is 619-744-0545. And my email, I'll say it and then I'll spell it because it's 3 complicated words. It's ckonecki@cavignac.com. So that's C as in Carolyn, my last name Konecki, Konecki, and my company is Cavignac.com. So that's my email. And then our website is Cavignac.com. And I'm actually drinking out of my Cavignac cup so you can see how it's spelled.
There we go.
Yes.
Let's see. We're coming up on time, but I wanted to ask one last question. Is there anything that I haven't asked you that you'd like to go into, or any final words of wisdom or anything to share with our listeners before we bring this to a close?
I just think it's important that, that if whoever they're working with as an insurance agent, that they meet with their agent on a regular basis. That's one of the things that we do that our clients tell us, that they like best, right? We work with all these different companies. We're licensed in all 50 states, but the important part for me is that we meet with our clients on a regular basis, ensuring that their coverage is always current, because people's situation is not static. And, and I think that, and then it's also important to provide excellent service. We've gotten so many clients for the simple reason that I answered the phone.
Isn't that interesting?
When it actually rang. And, that number I gave you it's my direct line. It rings right here at my desk.
Very good.
Yeah.
And let's see. And how often do you meet? You say you meet with them regularly. Is that like once a year, once a quarter, every 6 months?
Minimally it's once a year.
Okay.
A lot of our clients, we'll meet with them for quick transactions. They bought a new car, or a child is getting their driver's license or something like that. But we do a comprehensive review at least once a year.
Very good. Okay. I've had the pleasure to sit in with a longtime colleague and friend, Carolyn Konecki, with Cavignac Associates here in San Diego. Carolyn, thank you so much for sharing your wisdom and your insight with our listeners. It's been a real pleasure.
Thank you. Thanks, Rod.
You're welcome.
Bye.
You've been listening to the Legacy Leaders Podcast with Katie Beth Hand and Stan Miller. For more information on them and the show, please visit pinnaclelegacylaw.com. If you like what you've learned today, do share the program with your friends and subscribe wherever podcasts are found.